All right, welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, the founder and certified tax planner here at Better Books Accounting, where it is our goal and dream to see you, the real estate investor, keep more money in your account through the power of tax savings. We often talk about how there are 4 things that you need to get your real estate portfolio operating to its highest potential. If it's not reaching its highest potential, you are leaving money on the table. Those 4 things are cash flow, appreciation, leverage, and tax benefits. We know that most people miss out on tax benefits because they haven't met with a qualified tax advisor, or maybe their tax advisor is not specialized in real estate, or maybe they're not planning around the year and they're just meeting with their advisor once a year. Whatever the reason is, we know that tax benefits, which is number 4 of those 4 things you need to fully utilize your tax portfolio to its fullest potential, that number 4 of tax benefits is often missed, right? We can get leverage because you usually have a loan, or you can tap into the equity through a loan because real estate is a physical asset, which banks or lenders are happy to lend on. So leverage is no problem. Cash flow can be found if you find the right deal or you're working with the right people to help manage income and expenses. Appreciation happens over time if you're buying in the right area and at the right time. But tax benefits requires a little more work. You need to make sure that you have the team in place to get those tax benefits. And that's our goal here, is give you the information you need to confidently make decisions about your portfolio, about your real estate business, and grow that money not only in your accounts, but in your real estate portfolio, right? Our clients, our best clients, are constantly scaling up their portfolio. We work with people who are growth-minded, and we know that you, the listeners, are in that category. So if you get any sort of value out of this episode, please be sure to share it with a friend and leave us a 5-star rating and review. If you're listening on Spotify or Apple, hit that subscribe button. If you're following along on YouTube, hit that subscribe button as well. If you haven't checked out the YouTube channel, I highly encourage you to do so. We are scaling up our ability on the video content side, and we'd love to hear your feedback. We'd love to see what you like, what you dislike, and be sure to leave some comments so that we can continuously improve and build upon this Better Books foundation. So today's episode, we've covered in the past the 6 keys to real estate investing, 6 keys to increasing your real estate revenue, and we're shifting our perspective today. I'm going to be talking about audits and whether you, the investor, should be worried about audits. And it's an interesting time out there, and this episode is quite timely because recently there was an announcement, I guess you could say, at a advisor or an industry specific accounting conference. It was hosted by AICPA, which is the American Institute of Certified Public Accountants. So if you are working with a CPA, they are licensed through AICPA. It's a conference, an industry-specific conference where a lot of accountants, CPAs, licensed professionals in the industry get together, hear about what's going on in the industry, and get to collaborate on things that they might be doing in their firms. And the point I want to make is that there was a topic covered in one of the speeches, so a keynote address, was about audits and what we should be aware of as industry professionals about the threat of an audit and what's going on behind the scenes at the IRS that we as CPAs should know about. And the point that they made was that the IRS has a large amount of money at their disposal that they are going to use and put to use to make sure people are remaining compliant and not breaking the law. They're going to use that money to audit people. And the overarching theme of this address was that the IRS has a lot of money, and they're not going to use that money to just hire entry-level positions. They're going to use that money to hire experienced accounting professionals who know the law, they know what's right and what's wrong, and they're going to be hired and ready to go from the get-go. And traditionally, when you hire an IRS employee, there's a training period, just like any job. When I was at PwC, I went through a training period where they put me through their onboarding, I guess you could call it, and I had to learn the typical standard operating procedures. I had to learn what an audit was. When I went into the tax, I'd have to learn how they were working from a tax perspective. And this training was really done so that we could develop that foundational level of skill that we could go and use in the industry. And as somebody at PwC in that entry-level position, it wasn't right away that I was going and auditing these big financial service companies. There was a training period that they had me in, and through that training period, they got to see whether I was ready to go out and do the work. And that's typical for most places that you work. I'm sure many of you have experience in the full-time job industry, and you probably went through a training period. And so the IRS is no different. They usually hire these entry-level positions, train them up for 6 months to a year, and then they say, okay, you're ready to go out and do the work, which if you're working for the IRS, is often the audit, and the audit of the American taxpayers, the corporations, and the individuals. But now they're shifting their way of doing things, and because they have this influx of money, they're able to pay people higher amounts, and the people that they're paying these higher amounts are more qualified for the actual job. So if you go on to the IRS website and look at what their employment opportunities are, many of the job descriptions you're going to see are high-level jobs. They're not just your college graduate, come and work for us, see how we perform things, and then go out and do it. It's, hey, you've been in the industry 10, 15, 20 years. You know your stuff. Come work for us. We'll pay you a good amount, and we want you to go and find the people that are not doing the right things. So they are hiring these highly qualified tax professionals to come in, sign the paper, and go out and find the people that need to be found. Because the truth of the matter is, not everyone is an honest tax-paying citizen. And it's unfortunate because most of us honest tax-paying individuals, we have some sort of moral code. If you are familiar with our services here and how we do business, we are very committed to the God of the universe and what he calls us to do. And that being said, we know that we have to pay taxes, right? The Bible calls us to pay taxes to Caesar, pay what is Caesar's, and pay God what is God's. And so that being said, we advocate for honest tax-paying clients, but the truth is that not everybody in this society is an honest tax-paying client. Many people don't file their taxes. So these new IRS agents are going to go after those people that have high incomes that aren't filing taxes. It's hard to believe that those people exist, but seeing the numbers, I mean, I take a step back sometimes when I see that people haven't filed their taxes since 2017. They're making over $1 million and they don't have any tax returns filed. They're going to be in for a rude awakening when these highly qualified employees come in. But the point is that this podcast is about whether you, the real estate investor, maybe you own a business, maybe you have a W-2 and you have a growing portfolio, wherever you are in your real estate journey, one of the things that comes up often when you think about taxes is this idea of an audit. So the question for you that in the back of your mind is, should I be worried about an audit? Or maybe you are worried about an audit and you're like, how true is this worry? Is this a rational worry? Or is it not a rational worry? And because they are increasing their reach through the power of experienced professionals, there is some substance to your worries about an audit, right? And worries about an audit are not new. Most people that are taxpayers have had that worry come up. But nowadays you see, I mean, back in 2023, we saw that the IRS was hiring upwards of 90,000 new employees that would be in that tax division. And so that raised some eyebrows. They were like, okay, what are they doing? And we know that the US is in an incredible amount of debt and the government needs some way of paying down these debts. And the only way that they're able to do that is through the collection of taxes. So they're getting more and more serious about the collection of these taxes. And that's not just in the 90,000 employees that they hired. It's not just in a coming of age, I guess you will say, and a growing understanding that this $34 trillion debt is not going away. And it's a real thing that we need to be concerned about. But it's in this latest breaking news of the fact that they are hiring. They have a great amount of resources. I think I saw that they have $60 billion to go out and use over the next 10 years for whatever they deem to be the most important issues. And you know the IRS deems the important issues to be collection of taxes. So should you be worried about an audit? The answer is it depends. If you are not following the law, if you're not doing things correctly, if you have crummy bookkeeping, if you haven't met with an advisor, then yes, you should be worried about taxes. If you're not keeping record, if you are just keeping your receipt in a shoebox, then yes, you should be worried about an audit because that's not going to fly. If the IRS comes knocking on your door and you haven't filed taxes for 3 years, well, they're going to say, okay, we're going to look at how much you were paid based on your 1099s or W-2s or whatever it is. And we're going to assess that you owe taxes on all of that. And then you also owe us interest and penalties, right? They're going to hit you as hard as they can because they know that you're not doing things correctly from the get-go because you're not filing taxes. And now they're going to say, okay, we know you've made money. How much money did you make? You owe taxes on all of that, right? They're not going to let you just write off things if they know that you're not filing taxes and you aren't keeping good records, right? They're going to say, okay, you made $1 million. You're going to pay us $370,000. That's 37%. And all of the interest and penalties that would have been collected. This idea that if you're not doing things the way that you're supposed to be doing, then yes, you are to be worried about taxes. You are to be worried about an audit. Now, if you are doing things correctly, then there's less worry that you need. But what I find is that even the people that are doing things as best as they can, things can slip through the cracks. It's not going to be perfect. And with the amount of information that is in that tax code, it's thousands of pages long, there's chances are that you're missing things. And so what can you, as the honest tax-paying real estate investor, do to protect yourself, to make sure that if an audit comes, you are covered, to eliminate that worry of an audit? Because we know that it is so crippling sometimes. Like I have conversations where people are like, I don't have books over the past 3 years, I haven't had an IRS notice, but I know if they came, like I would have nothing to show for it and I'd be swimming upstream and it wouldn't be pretty. And so wherever you are in your accounting and tax walk as a real estate investor, I have 3 things for you. The first is find an advisor, okay? The number one thing that anybody can do to save on tax, to protect against the IRS, to make sure you're doing things correctly is find an advisor. And you're like, okay, how do I find an advisor? Do I just go to H&R Block and meet with the first person and take all the advice that they give me? No, come on. We need an advisor who is specialized in your industry, right? If you have a tumor in your stomach, you're going to find a doctor, a surgeon who is specialized in removing stomach tumors. If you have a cavity, you're going to find a dentist who can help you remove the cavity, fill the cavity. If you need surgery on your ACL, you're going to find a surgeon who specializes in the ACL repair surgery, okay? So we need a specialist in your industry. Most of you guys are real estate investors. You need somebody who's specialized in real estate. Some of you are business owners looking at real estate and trying to find out, can I save taxes, right? These tax bills are getting astronomical because my business keeps growing. What can I do? And you're considering real estate. You want to meet with somebody who has not only a real estate expertise, but an expertise with real estate in partnership, in conjunction, alongside business ownership. Okay, there are plenty of us out there, but whatever industry you're in, you need to find a tax advisor who's specialized in that industry and who can point you in the right direction, saying, these are the records you need to keep. This is how you should do bookkeeping. This is how often you should be meeting with us to discuss what are we looking at from a tax burden? What can we do to eliminate that tax burden? What can we do to defer that tax burden, right? And you do that by finding the right advisor. Number 2 is meet with that advisor regularly, okay? We know that many of you have met with a tax preparer at one time or another, right? I got off a call recently. The guy was referring to his tax person as a paper pusher. And what he meant by this is he just takes the information he gets from you, the taxpayer, fills it out on what used to be paper. Nowadays, I would hope they're using some sort of software and just pushes it through and next guy up, right? And this is what's referred to as a paper pusher. But what you need as a real estate investor, somebody who's worried about audits, somebody who's considering taxes, right? Remember, going back to the beginning of this discussion, you have 4 opportunities as a real estate investor. One of them is tax savings. You want to make sure that you're getting tax savings. That happens by meeting regularly with the qualified advisor, right? It's like going to the dentist. You have regular checkups every 6 months, sometimes every 4 months, right? Even if you have a personal trainer, they might give you a workout plan and say, go and work out for the next month. Let's come back and assess how you're doing a month from now. And then from there, we'll do it again and come back and assess how you're doing a month from now. You do it with your financial advisor. Sit down, I would hope, twice a year, maybe more. The same is true for tax advising, right? And often even more so. The costs of not doing this are great. You're going to overpay on taxes. You're going to open yourself to an audit. You're going to have messed up books and live a chaotic lifestyle because you haven't kept up on things. You haven't met with an advisor. You don't have somebody to hold you accountable. The reason that people are able to lose so much weight when they have a personal trainer is because they have an accountability partner. How many of you have tried to implement a positive habit or remove a negative habit, and it helps to have somebody alongside with you? My wife and I were doing 75 hard at one point. I know that it was a lot easier to go through the pain of 75 hard because we were doing it together. It was like this idea of collective suffering, some people say, but it brought great enjoyment, right? Meeting with your tax advisor doesn't have to be a suffering type of process. It can bring great enjoyment in the form of tax savings. We just met with one of our clients earlier in our quarterly meetings, second quarter meeting. He's like, hey, I have a capital gain. I'm not really sure what I can do because I'm in it with some family and we're not going to do a 1031 exchange. I'm like, all right, let's just think about it for a little bit. I'll go into our plethora of resources and see what we can do. I'm not going to get your hopes up, but I'm pretty confident there's something we can do. And 24 hours later, I sent him a message saying, hey, this is what we can do. What do you think about it? And now we're going to be talking about whether we should go forward with this tax strategy that will eliminate $30,000 to $40,000 of taxes on a $200,000 and some odd capital gain. This comes in the form of meeting regularly with your tax advisor. So that's number 2. Number 3 is stay within the law. There are plenty of tax advisors that will give you a form of tax savings because they are not honest, right? We talked about this moments ago about being an honest tax-paying citizen. And this comes in the form of staying within the law, right? There is a tax code. There are guidelines you have to meet. There are requirements that you have to adhere to. And so that not just everybody can go out and create these entities and write things off and pay no tax, right? They do these things because, one, they know that taxes, tax savings, and tax credits and ways to mitigate taxes are an incentive to you the business owner, you, the real estate investor. But number two, there is a rule, there is a law that you need to follow so that it doesn't get abused, right? The law is there so that we can live in a society that is regularly or relatively orderly, right? If we didn't have any law and people were allowed to just go run rampant and do whatever they wanted to do, then anarchy would come, right? This is the craziness of the defund the police movement, is that without the police, there's chaos and disorder. And the same thing goes with taxes. Without a tax code, there is chaos and disorder. People can do whatever they want with money. They can get into a whole host of businesses, right? So taxes are something that we need in order to survive as a collective society, but it's also there to help you understand, okay, there are certain things I can do to make sure that I'm not paying taxes. And so you need to make sure that you're staying within the law, right? A prime example is the Augusta rule. Some of you are familiar with it. It's a very popularized tactic these days because it has surfaced on social media and everybody thinks they can pay themselves from their business $1,000 a month without any sort of documentation. And now they just saved $3,000 in taxes throughout the year because they did that 12 times. I love the Augusta rule. I think it's a great idea and I think it works for people that are qualified. But there are certain guidelines that you need to have to make sure that you're staying within the law. You need the right documentation. You need a business use of the property. You need to document what happened in the meetings, if that's what you're using it for, or what happened during the days that you rented it out. So number 3 and number 4 go hand in hand, and that's stay within the law and document everything, right? Our tax plans are always footnoted with IRS code and tax law that has been passed, court cases that have made it through all the way through the highest tax court. And this is because we know that confidence comes by knowing that things are allowed. And so we can build your confidence as the real estate investor by footnoting where we have found the legal defense for such strategies. So you should stay within the law, and then you should also document everything. So we have tax plans and we have steps that we advise clients to work through. And then we also say, keep receipts. Make sure that you document the meals. You're going to use the Augusta rule. I need a contract in place. You need to fix a certain amount and certain dates. Like there are guidelines and restrictions that you need to adhere to in order to use these strategies. Cost segregation. You are not going to get the full benefit of cost segregation if you go with the $50 option of cheap software. We need engineers that have been through the courts and have had their services verified by the regulators. So any strategy that you have, it is only as good as the documentation you have to back it up. So the idea of this podcast is, should you be worried about taxes? And the answer is, it depends. Are you covered? Are you meeting with the right advisor? Are you documenting everything? Are you staying within the law? If you have those things, you don't need to be worried. If you don't have those things, you have reason to be worried. And now is the best time to fix it. Now is the best time to meet with an advisor, somebody qualified, somebody you can rely upon, somebody who has the qualifications and the licenses and the resources necessary to defend you if the worst case happens. Because this is coming. They're already doing this. They have a plethora of resources. And yeah, they're going to go after those who haven't filed taxes first, but there's also signs of them coming after people who have gotten research and development credits. All right. Many of you might know what those are. Many of you have arguably used them. Okay. They're going to go and make sure that this was done properly. They're going to go after partnerships. These are things that there are specific requirements that you need to follow in order to be within the law. Partnerships are not as easy as just filing the income and expenses. There's a lot of things that need to be done properly, including the capital account balances that people often forget. So these are things that we need to be aware of. I'm not one to fear at every moment. And I think there are things that you can do now. But the quote that stuck out to me, he said something along the lines of, the IRS that we have today is not going to be the IRS that we have 2 or 3 years from today, because they're going to be equipped with strong professionals. They're going to be equipped with people who know the law and are motivated to find people that are not breaking the law, especially accountants that are signing up to work for the IRS. They're a unique individual. They are people that know that there's a right way of doing things and a wrong way of doing things. They tend to have a strong moral compass. Now, there's obviously exceptions to that, and that goes with the stay within the law metric. There are accountants out there that haven't stayed within the law and that the price has been paid. But you have to know that with these experienced professionals that are coming in to the IRS, there are things that you need to be aware of, things that you need to be considering when you do certain tax strategies. And the best way to defend against it, the best way against IRS audit is strong documentation, having the right team in place, doing things that are according to the law, and making sure that your I's are dotted and your T's are crossed, so that if that notice comes, it's quick. Everybody is on the same page. You know that everything you did was correct and the IRS is in and out. But if you get that notice and you're not properly protected, it's going to be a headache. there's going to be large costs, and you're going to wish that you took the advice that you are hearing currently. So that is it. Again, you got any sort of value. If you know somebody who might get value out of this, go ahead and share it. And again, subscribe, leave us a review. These things help us so much, and we want to hear from you. We want to improve on the things that we're doing. So if there's something that you want to hear about, if there's something you know that we can do better, we'd love to hear from you. I appreciate each and every one of you. I pray God's blessing over you and ask you and encourage you to keep moving forward.